if not possible, by tomorrow. Okay, so yeah. Okay, so let's continue the session now. Okay, so now what we have seen about the basics of the Malaysian SNR using the basic key levels. So these are the key levels here. Okay, so now yes, we have what a breakout pattern. The breakout here. Yeah. So now once we see the breakout, we will look for entries. We will look for entries at the key levels. Okay, even if we look at that one, this is QM level. Where is this is a QM level. This is an extreme, an extreme, and we have the RBS. Okay. So now, how do we refine it? One time frame below. Okay. Go to 1 hour time frame now. So how do we refine it? I will refine it to this support level. Okay. This support level. Now, the support, just don't worry about what I'm telling now. Yeah, just concentrate on the support and resistance areas. Yeah, SNR levels. Don't worry about the entry. Yeah. So now I told you support and resistance support I mean key levels alone won't work. It requires it requires a trend line. So how do I pull up the trend line now? It is subjective. Again, it is subjective. A trend line, you can choose your own trend line. Okay. I can draw a trend line from here to here. Now go to the line chart, look at the precision. Okay. With enough experience, you can able to draw trend lines like me without using the line chart. Yeah. So now I told you I will enter at the second. I have the I will enter at the trend line. If the trend line is below the SNR, I will enter at the trend line. If the trend line is above the SNR, I will enter at the SNR zone. I will enter what comes below. Yeah. So now here, if I enter here, yeah. So now, where do I put my stop loss? Here. Yeah. I'm just showing you. I'm just showcasing you what it is all about. Yeah.
Well, you
70.
do you draw your trend lines from the body? Yeah.
Yes, but the trend lines comes from the line chart, not from the candlestick chart. Okay, so
Yeah.
I have experience with the candlestick chart directly from the candles. Yeah.
Yeah. Yeah.
Okay, so it's actually the line chart. You see the precision here? One, two. Yeah. See that? That's how I draw the trend line. Okay, you can use your own trend lines. Yeah. So now, where can I pull out another trend line from here? Okay, this is a 4 hour time frame. Yeah, I can even pull out a trend line from here to here. Okay, this is also a trend line. But did the, okay, the trend line has not get tapped. So I will look for another trend line on the 1 hour time frame. I have another trend line here from here, sorry, here to here. But it's didn't tapped here. Look at the precision here. It comes from the Pro, okay? Remote access. Why do you need remote access?
Sorry, mistake.
Okay. Okay. So I mean, just don't do anything with the screen here. Okay. It will mess up. Okay.
Yeah. Okay. Okay. Excuse
Okay.
me.
Cool. Okay. Now. So now we have what a trend line. Okay. It comes from the line chart, not from the candlestick chart. Keep that in mind. Okay. Now here on the 4 hour time frame, we have a very good looking, beautiful trend line like this here. Okay. I look to the precision here. It tap, it flies. I mean, here. Okay. It tap, it flies. Okay. So now that's how we use the basic Malaysian SNR. Okay. So these are the extreme basics of Malaysian SNR. Now we're going to be looking at the tested and untested levels or fresh or unfresh zones or key levels. Okay. So now we have a key level here. This is a support zone. I mean a resistance area, and we have here resistance. Okay, now price tapped here and rejected now. Rejected, it gives a good reaction. We can catch all these pips here. Okay, but once it tapped, now you might be thinking, okay, the price tapped the support and that's in a level, and now it got broken here. Now it becomes unfresh. Now this is what you might be thinking. Yeah, yes or no? Is this doubt that came through your mind? Yeah.
Yeah.
Yes.
Okay. So now, if you have something, if you have same doubt, the thing is that a zone will become invalid once it created a storyline. If price creates something like this, once it tapped the SNR level, then this becomes invalid. Okay. If nothing happened like this, then it's still valid. Okay. Now, if you look at this one here, price tapped here. What is the time frame? It's 4 hour. Let's go to the 1 hour to look for a breakout. Okay. Now, on the 1 hour, do we have any breakout? No. How do we confirm this? Line chart. No breakouts. Okay. So now this hasn't created any storyline. Now, is this valid? Yes, it is valid. Okay. I will look for breakouts at the same level now. Okay. Understood? Now, here, come here. We have a 1 hour area now. Surprise, broken this. It broken this. Now you might be thinking, okay, now price broken this area. Okay, this becomes invalid. No. Okay. You see, this is valid. If a key level starts a storyline, okay, storyline, keep this in mind, then that zone becomes invalid. Okay, understood? So now that is the thing. Okay, so now here, another example. I'll give you more and more examples here. Now, this is a 1 hour key level. Okay, this is a 1 hour key level. Price tapped, rejected. On the 30 minutes, I will look for what? A breakout. Do we have a breakout? Yes, we do have a breakout here. See the breakout here? Yes. Now, this is invalid. This level is invalid. We won't be looking for entries at these levels, entry opportunities, I mean. Okay. So now we have this level here, and the same thing. Price tapped creates what? This one, breakout. Okay. So now that is how we confirm the fresh and unfresh key levels and or tested or untested levels. Okay. So that's the thing. Understood? Okay. So now this is the thing. Now this is the basic of Malaysian SNR. Okay. And one thing to keep, after the session, you can't able to trade like me. You can't able to trade like me. I'm telling you the truth. Okay. After the session, after you practice, it would at least take 3 months, okay, to get these things into your eyes. You need to train your eyes. Okay. Now your eyes might be trained to something, or something like smart money and what is a retail concepts and all these stuffs. Yeah. Now next we'll be looking for imbalances or order blocks, liquidities and stuffs. Okay. Now this basic Malaysian SNR. Yeah. This is a new concept, right? So it will take time. It will take time. 1 month, 2 months, 3 months. Not more than that. Yeah. Within 3 months, you can become consistent with this process. Okay. So it will take time to understand the process. So good things take times. Keep that in mind. Okay. So now this is the basic concept of Malaysian SNR. And not only the basic, this is the concept that we're going to be using, but in a different way by adding a flavor to it. Flavor is the new concept, a new concept that was introduced in 2013 by the greatest Malaysian SNR traders. Okay, so now that I'll be talking you, I'll be teaching you at the end of the session. Yeah, I mean the end in the sense after teaching you all the basic concepts. Okay, so now let's keep the Malaysian SNR aside. Okay, we are done with the basic concept. Now I'm gonna be teaching you the ping pong algorithm. The ping pong algorithm. Okay, so now let's come back to the smart money stuffs. Okay, I'll show you magic now. So now once I want you people to respond to me. Okay, so that I will I will get to know like you understand this thing or not. Yeah. So now let's say we have something like this. Okay, we have something like this. When we have something like this. Smart money traders. How many of you are trading the smart money? Let me know, please. How many of you
Yeah,
people are trading smart money?
I trade
Me.
smart money concept. Me.
Okay. What about Parsa?
Yeah. Me too.
Okay. And Anurag and Harkirat. Harkirat? Yeah.
Yes.
Yes,
Harry.
I
Harry.
also trade the concept. Yes. I also trade the
Okay.
concept.
Okay. And about Fahad? Uh, I think Farhad is not here. Okay, so no problem. So yeah, most of you people are familiar with the smart money stuff. Okay, now I'll tell you the harsh truth about the smart money. Okay, now let's say we have a break of structure here. So what basically a smart money trader will do? Okay, now let's assume this is a 4 hour structure. Okay, so once we have something like this, smart money trader will wait for a 15M charge, right? A 15M charge like this. They call this as charge. Okay, and they will mark their highs and lows. Okay, so once price swept liquidity and breaks structure, they call this as strong high. Yeah, strong high, and they will trust the strong high to hold. Yes, and then they will mark their point of interest. Okay, how do they mark their point of interest? Premium and discount. Mark their point of interest here. Basically, what they will do is they will wait for the price to create liquidity first, like this, double bottom, double top, something like this, and wait for the price to tap, wait for 15M change of character, and then wait for 1 minute change of character. And some people will wait for seconds change of characters. Okay, and they will enter and they will expect the price to break the previous low like this. Is it how you trade? Yeah. Is it how you trade basically?
Yes.
Yes.
Yeah.
Yeah.
So you call this as liquidity, right? So now everyone will be entering here. Everyone will be entering here and expect the price to go here. Okay. This is what you do, right? So now price what actually do is it will give the exact reaction you want. Okay. And then it will flush you out like this. Now, now what do these people think? The people will be okay. The trend has changed. It's bullish now. Fine. Now I'll be looking for buys below the liquidity. Okay, here is the nice, good looking point of interest and liquidity resting above. Now it is a high probable point of interest. Okay. Now wait for the price to come to the point of interest. Wait for a change of character. Enter here. Look for buys. Yeah. Is this how you
Yeah.
do in
Yes.
your real life trading? Yeah.
Yeah.
Yeah. Now, again, price will give you the reaction you need and again will flush you up in the toilet. Now you don't have any idea what the market is doing because you have a systematic rule. You have a systematic plan. You wait for a 4 hour you wait for a 4 hour point of interest. I mean high time frame point of interest, change of characters, liquidity sweeps, entries, timings, New York kill zone, New York London session, all these stuffs. Yeah, but still you were losing and you still don't know why it is happening and you still believe okay this is exactly how the market works and still you're losing money in the market. Yeah, this is what happening. This is the truth, harsh truth. Yeah, but on the bigger picture what actually happening here is now these people do not know what the market structure is doing, but the market structure it's going on its own way in a correct way. Yeah, but these people do not know. Smart money traders don't know how exactly a market structure works and how exactly a trading range looks like. Okay, so on a bigger picture, if this is a bearish, why do you look for bearish trade? Why do you look for sells? Because the trend is bearish, right? So if you're in a bearish trend, how the previous price action looks like, it'll be looking something like this, right or not? Yeah,
Yes.
there'll be multiple break of structures, bearish break of structures, right? Yeah.
Yes.
Yes.
And yeah, this is the high low, this is the
Yeah.
high, and this is the low like this. Yeah, so now let's talk about the other traders. Okay, let's talk about the other traders now. Support, resistance, broken support turn into resistance, SNR zones. Okay. So now here, you, smart money trader, will be entering here with a very small stop loss, targeting this place. On the other hand, we have the SNR traders. Okay. Here. Okay. And then we have the breakout traders. Breakout traders enter at the break of structure here. Okay. And they put their stop loss at the swing point like this. And they will target this 1:1. Okay. And then we have trend line traders, right? Yeah. Trend line traders enter at the third touch of the trend line. They will enter here and they put their stop loss at the previous swing high because people been taught that the swing point is the safest place to put their stop loss. All right. So now, if you look at the market here, what is the difference between the smart money traders and the retail traders? No difference, right? All the
Yeah.
people trading at the same place. Look at the precision. All the people are entering at the same zone, same areas, but the different approach. So you need to understand smart money is the modern retail strategy. That's it. New concepts, imbalance in all these stuffs, but still it's a modern retail strategy. Yeah. Because it was actually the smart money concept was released by ICT, but people were developing their own concept using ICT knowledge, and then they created something stupid. Okay, because they do not understand what exactly is happening. But still, ICT is a different concept. That's the real smart money. Okay, so now if you follow ICT, that would be you need more patience, and you need to understand a hell lot of stuffs to understand his concept and to pay yourself. Yeah. So now that's the real smart money. Yeah, this is not smart money. The thing you're seeing on Instagrams, yeah, point of interest, liquidity sweep, charges, entries, these are not stuffs. These are not real stuffs. Okay. So now people will get stopped up. Okay. So why are they get stopped up? Okay. Because if there is a strong high, it needs to hold, right? So why people get stopped up? The thing is that the market is the market algorithm is programmed like that. Why? The market, the aim of the market is to stop you out, is take all the retail traders' money. Yeah. So why do banks and other big financial institutions invest in forex? To make profit, right? How do they make profit? They make profit with our money, with our hard-earned money. Okay. So let's say I'm retail trader to the market. I am a retail trader to the market. Yeah. So now if I put 100K on my account, you were using like you're investing 100K on your account. If I lose 1%, what is that? What is it? It's £1,000 for them, right? Yeah. So now that's how it works. That's how it works. So they make money with our money. So now what how the market makes a trap. Okay. So now, do you think the smart money is not the familiar concept? It is a familiar concept, right? So if you go to Instagram, if you go to Google, anywhere else, if you type smart money, the first thing will pop up is the trading strategy. Yeah, not something like smart money hacks or stuffs. The first thing that will pop up as the smart money strategy. So, do you think the market makers are not aware of this one? Aware of this one? They are aware, right? Because if market knows, the market makers came to know that okay, people are making money out of something, they will create a trap. Okay, but the trap is not that has created today or yesterday. It has been created when the forex market has been created. Yeah. So now they have trap for all types of traders. They have trap for all types of trader, and the algorithm cannot be changed. Yeah, because there are millions of lines, the millions of lines programmed, so it can be changed. You can't change the program. So the market programmed to take all the retail traders' money. Okay, so now if I know exactly how all the traders are entering them, I'll wait for the people to enter the market. Okay, this is what we do. We'll wait for the place where we'll wait for other traders to enter the market. Okay, so if I know this is where the place where all the traders will look for the entries, then I will wait. I will wait, and once all these people get stopped out, I will enter about there. That's it. That's it. Okay. Now, this is not the liquidity. The double bottom and the double top is not the liquidity. Where is the money? Where are people entering? That is the liquidity. Now you might be wondering, should I supposed to look for a point of interest about this? No. Every potential smart money entries, if you are a smart money traders, and what do smart money traders basically trade? They trade imbalances. They trade something like, what is that? They trade auto blocks. Yeah, all these stuffs, right? So every potential entry point of a smart money traders is considered to be a trap. A trap. That is what liquidity inducement trap or liquidity inducement theory. Okay. Now all these people all get induced. Okay. So their stop losses or the real liquidity. The double bottoms and double tops and all these trend lines are not liquidity. Understood? Yeah. Yeah. So some people will be thinking, okay, I can enter like enter here. They'll enter here and they will get stopped out, right? They'll get stopped out for sure. Yeah. So that's the thing now. So this is the diagrammatical explanation of how other traders get trapped into the market. Now I'll show you real examples. Don't worry. Okay, so let's jump onto GBUSD. I'll show you examples. Where can I show you some good examples here? Give me a second. Let me pull out a nice example. Okay, okay. Yeah, fine. So now here, what do we have? If you look at this area, we have a sweep of liquidity, a break of structure. Now, what is the point of interest that you would be looking for if you are a smart money trader? Notice this auto block, right? Everyone will be looking at this auto block. Everyone. Why? Because this is an auto block that swept liquidity, that broke structure, that has imbalance, that has liquidity resting above. This is what you've been taught. Yeah. If all this criteria has been met, this is a nice POI, right? This is a high probable point of interest. You will look for entries here and you will put your stop loss here. Okay. Some people will refine this to the lower time frame. Let's refine it. No problem. Okay. Now this is the point of interest now. And let's refine it more. Can we able to refine that? No. Okay. Some people will refine that to this one. Yes or no?
Yes.
Yeah. Am I right?
Yeah. Yeah.
This is what exactly you people were doing. Yeah. And then I know. Can you mute the mic, please? Yeah, cool. Okay, fine. So now this is how you trade. Okay. So now the thing is that I know this is a trap. Why this is a trap? This is a smart money trap, right? So now we don't actually need to worry about other traders like retail traders, trend line traders, breakout traders, all these people. We need to worry about smart money traders. Why? Because smart money traders will take care of other traders. Okay, so we don't need to worry about any other traders. Just worry about the smart money traders. If you are a smart money traders, congratulations, because you can easily find the trap. Because if you are looking for a point of interest, if you think, okay, this point of interest is going to work, then that is the point of interest that is not going to work. Okay, I know this is a trap. Okay, so I will mark this level. So if this is a trap, where will be the stop loss? The stop loss will be here or just below it. Yeah, not anywhere else. Yeah, this is how they enter. So now the thing is that, let's come back to the same example here. I told you, if we have something like this, yeah, if smart money traders are entering somewhere around here, they put their stop loss here, right? They put their stop loss here. Now, and all the other traders, resistance, support traders, and trend line traders, all people will enter here, right? So now, let's say the smart money traders got trapped and then they got taken out. Once they got taken out, yeah, once all their money has been hunted, price will quickly move to the opposite direction. Quickly move. Why? Price, you might be asking why price can go a little bit higher. It won't do that. Why? Because, if price keeps on moving like this, smart money traders consider this area as a flip zone. Yeah. And the retail traders consider this area broken resistance turn into support, and they will look for entries here. So the market makers don't want us to make money. Okay. Okay. So they will, once the trap has been cleared, once they take all the money, it will quickly move to the opposite direction. You see how they're gambling us? This is how they gamble us. Now I know this is a trap. So what I supposed to do? I need to choose my point of interest closest to the trap. Closest to the trap. So where is the trap? This is one. This is the trap. Now where is my point of interest? My point of interest should come very closest to it. So what is closest to it? This week. Okay. So now you might be thinking, okay, this week is mitigated. This is what you think. No, a week has
50%.
2 point of interest. Okay. If I draw a Fibonacci from here, a week has, a week has orders sitting at the edge, at the starting, and at the 50%. Now, the starting of the week has been mitigated. That's why price flies. The 50 percentage of this one is not mitigated, of the candle is not mitigated. So now, what is the closest point of interest? This is the closest point of interest. If I enter here, where will I put my stop loss? At this low. Now, what is this one? This is trap. Okay. So now, where do I enter now? Not at the trap, at the point of interest. Where do I put my stop loss? Here. Okay. So this is the ping pong algorithm. Okay. And with by using this, this is how I can play ping pong all the time. This is what you are seeing on my charts. Now, if I play the price like this,
Oh,
you see that? Yeah. You just don't look at this one, look at the
yes.
reaction here, how they trapped out. All they got trapped, all they got stopped out, and price is flying high. Yeah. So some people would be marking this zone as a supply zone, like this, as a full. Okay. But this is the real area. So I told you, yeah, once you enter the correct POI, price will reject immediately from the zone. Immediately. Like this instant profits. Instant profits. Okay.
Can I ask you a question?
Yeah. Go on, please.
So you don't refine the POI below the trap on lower time
Yeah.
frames. You
Yeah.
just find the POI on that same time frame that you find the trap.
Uh the trap, no, like if I'm okay with the stop loss, I will stick to it. It's 4.6 pip stop loss. Okay. So
Yeah,
now if I find the trap, I know the entry should come very closest to the trap, right? So I know this is a trap and this is the potential area that I could look for entries. Okay. So if I want to refine that area, I will go to the lower time frame. So if, let's say, I want to refine this point of interest, I'm going to go to the 5 minutes time frame and I look for the refinements. Okay. I'll go to the 5 minutes here. I'll show you how I refine this point of interest now. Okay. So now I came here. What do we have here? We have the wick. Okay, same wick, and 50% of the wick is not mitigated. I will choose this. Put my stop loss here. Come here. Look at the pressure.
yeah, perfect.
That's how we refine it. Okay, if I want to refine it, I can refine it like this. 2 pip stop loss. Now is it convincing? Yeah.
Yeah, yeah.
Even if I hold it this high, it's 21 R. And look at the quick rejection. You can break even quickly, bro. That's the thing. Is once it it moves, you can break even. You don't need to wait for the break of structure and stuff like that. When you enter the current POI, you can break even very quickly. Okay. Okay. So
Yeah.
now how do I take these trades? I know the trap, but the trap is not enough. Just a trap is not enough. We need certain things. Okay. We need certain things to follow. Okay. So for us to trade, we need a trading range. We trade from range to range. Okay. Our trading range looks like this. Okay. A strong high, a strong low, and a weak high creates a bullish trading range. A strong high and a weak low. This is a strong low, this is a weak high. Okay. And for bearish, we have a strong high and we have a weak low. Okay. Now you might be thinking, what is the difference between the strong and the weak? Because both are looking same, right? Don't worry, I'll tell you. So let's say the market is bearish. So sweep of liquidity, break of minor structure, major structure. Okay. Now this is what the break of structure here. right? And then we have again a bearish structure, break of structure, right? So now, if I want to see a bullish break of structure, what do I supposed to see? I need to see the break of the previous high. I need to see this high getting broken. Okay, until I see, okay, this high getting broken. Where is the trend? Okay, if I want to see the price turning bullish, I want to see this high getting broken, right? So until I see this high getting broken, now this, let's say price is creating a sweep of liquidity and a break of structure, internal break of structure. This is internal break. Here, what you are seeing is internal break. This is the major break, internal major. So price is create internal break of structure. If price create internal break of structure, then this is a weak low. If it creates an external break of structure, then it is a strong low. Until price creates an external break, this remains to be our weak low. This is our strong high. Okay, that's how it is. Now, the second rule is the, I mean, what is that? Okay, the second rule is you need to see the strong high and a weak low on the same time frame. On the same time frame. I'll show you examples. Okay. So now let's go to the 4 hour time frame here. Now, here. Let's come here. Okay. So now what do we have? Sweep of liquidity. Okay. Break of structure. Okay. Now this is internal break. Internal break. A break of structure, okay, should be broken by a body. Okay, here, this line is not a break. This is the break. The wick is not the break of structure. The body is what? Break of structure. Okay, so this is internal break of structure, external break of structure. Now it is a strong low. A trading range consists of a strong low and a weak highs in a bullish scenario, right? So we need a weak high. A weak high should sweep liquidity and it should break a swing structure. A swing structure means a three candle formation. What is a three candle formation? A three candle formation means a candle wick, left and right wick of the candle should be lower than the middle wick. Okay, so here the middle wick is bigger, and the left, you see the left wick and the right wick is lower. This is a swing point. This is a swing point. Left and right is lower. This is a swing point. Left and right is lower. Swing point. Left, right is lower. This is a swing point. Left, right is lower. This is not a swing point because we don't have any wicks on the right side. This is a swing point. Yeah, this is also another one. This is another one. Left and right is lower. Swing point everywhere, right? So now this is what we call it as a swing point. So now for us to have a what? A weak high or a weak low. Weak low in bearish scenario. For weak high, we need to see a sweep of liquidity like this and a break of swing point. I told you a break of structure should have a body break like this. Once you see this, we call this as a weak high. This confirms the trading range. Okay, a trading range from this, I mean, a trading range from this low to this high. Yeah. So now again, this is our strong low. Why? Because it swept liquidity, broke internal structure, external structure, strong low. Weak high. This is not the weak high. Does this swept any liquidity? No. Does this break any swing point? No. Here it swept liquidity, it broke the swing point. Now our trading range is from this low to this high. Okay. Now that's how we mark our trading range. Okay. So now when we have a trading range, this is a bearish trading range. Let's call this a strong high. Let's call this as uh, weak low. Yeah. Now this is our strong high. This is our weak low. Okay. So now highs and lows. Okay. So everything. Oh, okay, no, it's not everything. So whatever you see inside the trading range is what we call it as internal range liquidity. Every swing point inside your trading range is internal range liquidity. Yeah. So every swing point outside the trading range is external range liquidity. Okay. So now the thing is that if price broke this, it it goes for external range. Okay, so if price want to take external range liquidity, it need to take the internal range liquidity first. This is a bearish trading range, so this is internal range liquidity. First, price will take all the internal range liquidity, and it will go for external range liquidity. So keep in mind, price need not has to take all the internal range liquidity. Sometimes it can take liquidity from here, and it can fly down like this. Okay, it can fly down like this. Okay, so this is the liquidity concept: internal range and the external range. Everything inside the range is internal, everything outside the range is external. Okay, so now that's the concept. Okay, so now this is the basic of the ping pong algorithm. Okay, this is the basic of ping pong algorithm, and this is the real smart money concept. Okay, so
Oh,
now that is the real smart money concept. So the session is going to end in 3 minutes. So after 10 minutes break, I'll be restarting the session, and I'll be showing you real examples of how to take the ping pong algorithm trades. Okay, is that clear?
okay.
Okay. Thank you.
Okay,
Yeah, yeah.
I'll end the session now. Yeah.
Okay.